Hello, everybody. Jackson here with the Wealth Squad. Lately, we've been talking about different, potential investments, right? We talked about Square, Facebook. We haven't talked about Shopify, but Shopify's at that discount price too. And all these stocks are relatively risky to the naked eye, to your average investor. They're on the higher side of risk. Maybe not Facebook, but the others for sure. If that's too risky for you, if that's past your approach, or if you're more conservative investor or you're older, so you can't risk as much, then it makes sense. In that case, we have a couple stocks today that we'll be looking over um, that are trading at substantial discounts. Number one, number two are less volatile than the others, and these all pay dividends as well. Um, some more than others, however, but you will find that these are solid companies for the most part. We have one like kind of iffy, but these are all solid companies except for the one that's questionable. Um, but you will see a substantial price discount. So don't shy away from these just because they aren't falling as hard as the others. Maybe that's for a reason, right? So we're going to start off with APD, Air Products and Chemicals. Obviously, it's a chemical type company, but just for the general masses, not necessarily business to business. But you can see here we have a large decline from 330 down to 220. So that is substantial just because we look at the logarithmic charts, and let's do 5-year candles. You could see last time it had some heat like this was 2008, right? You can see it's just been on a general incline from 50 to 300 in a matter of 12, 14 years. And so right now we're seeing a discount around that 220 range. The dividend is around 3%. You can see if I click on the 1-year chart, we get $1.50 dividend every quarter. Times 4, you get $6, and over that 220 price, it's around 2.8%, a little less than 3. So not bad for a solid growing company. And you can see their earnings, I would say definitely majority of the time, maybe not so recently, but majority of the time you can see that they beat earnings estimates, followed along with a dividend yield and payout. So APD, definitely add this one to your list. We've seen discounts like this before, right? 250 to 170. Let's check this on a percentage base. At its lowest of 35%, and right now I'll just take from here, we're at 30%. So if we could get it at 200, that'd be a blessing, but it wouldn't be a crime to start averaging in right now. Next we got Sherwin-Williams. Sherwin-Williams we have here. They do paints, I'm sure you know. Big company around this last couple of years just because of demand for houses. And when you buy a house, you generally buy paint to go with it if you don't like a color, and that's why they've been booming lately. But let's see, the March peak pre-COVID was around 200, and then it fell to 111 at the very depth, but generally around 130, right? So that's a 35% decline. At the very lowest, we see 47%. So right now we see Sherwin-Williams at a peak of 350 at a price of almost 200. We see 235. Not going to be that 47% discount we saw, but it's going to be that 35% that we saw generally was where Sherwin-Williams was at. Another stock that pays a dividend, however, it's much smaller. So we're seeing $2 a year on a stock that's worth $220, $230. So we're seeing less than 1%. More around 1%, because this is 55 cents times 4, you get 220. And the stock is trading at 230, so a little less, but that's all right. You can see it kind of makes up for it over the last 5 years. Stock has gone from 100 to at one point 350, but but we are seeing 233 prices now. Let's look back to 2008 on a logarithmic basis, see what type of impact this great financial crisis had on Sherwin-Williams. We can see price of 24. This is pre-split, by the way. 24 to 14, so down 41% at the very depths. Generally did better than most stocks just because it's like a home improvement. It's like it kind of goes with um, Home Depot and Lowe's. Like if they're doing good, Sherwin-Williams is probably doing good. But we could see here not a substantial fast drop like COVID, which we did see that, and now right now. So are these stocks at the best price that you could get them? Probably not. We could probably perhaps wait a little bit. If we get this at 200, that'd be crazy good. However, this is just a stock to add to your list and keep an eye on it because it's not often where you get, the paint company at a 35% discount. The last time we saw it was COVID, and before that, we didn't see it, right? We saw it in 2008. So keep an eye on Sherwin-Williams as well as APD. And next we have a kind of iffy one. We have AT&T. So they're going through a merger deal right now where they're buying part of a company, Discover. And so they're going through a whole bunch of management and financial changes. It's hard to stay in this company and have high hopes. However, looking at over a long enough period, we see it's at its lower frame, right? From 30 to 20. It's usually not in here for long, especially in this 23 lower range. And the dividend yield is fantastic, but I will say it's getting cut in half at least. So we see $2 a year on a stock that's $23. So it's like an 8% yield. We're going to see 3-4% yield coming up when the merger and deal finally go through, and AT&T will cut just to save on some money because they're paying so much debt because they have so much debt already. It's a hard company to invest in. However, at this price, it's hard to pass up on. That's my argument for AT&T. Lastly, I'd say my favorite pick of the night is 3M. I used to love this stock, and then I kind of forgot about it. So we can see here 2020, the COVID crash dropped down to 120s, hit 110 around there, but it's been struggling ever since 2018, right? We see highs of 250, 260. Since this crash, we see 3M rebounded to 200, above 200, and now we're back below 150, right? So we're at least 25% off the highs. Now we're at 31, almost a third off the highs of the recent highs at least. Hopefully we can get around this 120, 130 range as well as it happened last time, but we can't wish for too much. We're wishing for every stock to fall a little bit more, right? But yeah, 3M, solid company, one of the most diversified out there. Has had a rough patch in the last couple of years. However, this discount that we're getting on something that has to do with, war and inflation doesn't make much sense for a company that generally makes, I'm sure you have gloves with 3M on it. I'm sure you have parts of your boot with 3M on it. Your N95 mask during COVID, that was 3M. Stuff like that. Like they hold, I think, the most patents out of any company. So they're in everything. 3M definitely one of the better stocks here just because they're more diversified. It's harder to lose all your money in a company that's in everything, right? So there's the 4 picks. We got APD, Air Products and Chemicals, Sherwin-Williams, SHW, that's paint, AT&T, kind of iffy company-wise, but overall a cheap stock just because of the lower range that the stock generally trades in. We're looking at one of the better prices. And finally, 3M triple M as the ticker symbol. A solid company trading at a discount that has been going on for some time now, but it's in everything, right? You can't lose money for a company that can only go under once USA stops existing, right? At that point, the dollar won't even matter. Funny enough, but that's the video, guys. I hope that helps. 4 stocks to watch out for if you're a conservative investor, if you're not leaned more towards the risky side. So I hope this helps you make some money and find some more stocks to research. Thanks for watching.